We're at 17,000 now. I want to go to economist Brian Wesbury. Brian, I know you're usually a rose-colored glasses kind of guy, and you've got ice water in your veins. How are you feeling right now?
Yep.
Are your glasses a little foggy?
No, you know, Charles, look, whenever I see the market doing things like this and there's no real fundamental reason for it. I mean, in other words, the Federal Reserve did not raise interest rates to 10% yesterday. In fact, they haven't even raised interest rates yet. And then what I assume is it's more emotion. And we haven't had a correction in a long time. That's what I think this is. And I still think the stock market is cheap. A year from now, we'll look back at this and look at it as a buying opportunity.
You know, I don't disagree with you, Brian, but you did bring up the Fed and the fact they haven't raised rates yet. So Are you saying that once they do, we can see more turmoil or at least more pressure to the downside?
Actually, I think this is it, Charles. It's kind of like, you know, we say sell the rumor, buy the fact. And I'm not, you know, it doesn't work out to the second, right? But just the fear. There's so many people that believe the only reason this stock market is up is because the Fed did quantitative easing and has held interest rates at zero. And I don't buy that. We tapered last year and the stock market was higher. Everybody thought tapering was going to kill the market. Yeah, I mean, we honestly believe that a 0.75% federal funds rate is going to stop Apple from releasing the iPhone 7?
Right.
No, it's going to still come out. And anyway, what I'm saying is I don't think the Fed is the reason for the market being up. And when they tighten, it's actually a good sign for the economy,
you know,
not a bad
it's
sign.
so funny though. On that point though, I think the Fed's dilemma. They've hinted, they've signaled that they want to tighten, but I don't know what it's on Janet Yellen's dashboard.
Yeah.
But from what I understand, there are not enough signals on there for them to legitimately hike rates. So if they do, what she's trying to say is, hey, the tail doesn't wag the dog. Wall Street doesn't tell me what to do, despite this 600-point back-to-back hissy fit. But she would be raising rates for the wrong reasons, and that could create a dilemma on its own, couldn't it?
Well, it could. But, you know, Charles, we're at 5.3% unemployment. We will be down at 5 or, you know, maybe even under 5 by the end of this year. We've gained jobs for 65 months in a row. It's true that inflation remains low, but there's really no justification for having 0% interest rates anymore. I mean, it's been 6 years. It's time to push rates up and be a little more normal. By the way, if rates go higher, I think banks will be more willing to lend.
Yeah.
It's really hard to make a 30-year mortgage at 3 5/8%. I know I wouldn't. I'd take one, but I wouldn't give one.
Well, you know what? I got to tell you something, Brian. I think you're absolutely right. But when we're in the midst of these things, it's frightening, it's worrisome, particularly for people who've lived through a couple of crashes. But you're the guy who introduced me to Hayek, so you make me feel better every time I talk to you. Have a great weekend, man.
Yeah, well, and just let me just say that, you know, these things are what makes investors money. It's the turmoil that makes investors money.
I'm savilating. I really am. I'm ready to jump in this bad boy first thing next week, maybe. Thanks, Brian. We'll see you soon.
Yep.